Hey everyone, and welcome. Today we're going to crack the code on financial analysis. We are going to take that huge mountain of financial data you see for any stock and turn it into a clear, compelling story that you can actually understand and act on. So, let's dive right in.
You know that feeling, right? You pull up a company's financial report and it's just this wall of numbers. It's so easy to feel like you're drowning in data, completely losing sight of what actually matters. But what if you had a system, a process, to find the real signal in all that noise? Well, that's exactly what we're going to do today. I'm going to walk you through a super simple yet really powerful workflow that you can use on any company. It's all about transforming those raw, confusing numbers into a clear narrative. So here's the game plan. First, we'll lay out our simple three-part framework. Then we'll do a 60-second health check. After that, we'll dig into the why behind the numbers, see how to visualize trends, and even take our skills global. And finally, we'll put it all together into your brand new investing workflow. Look, the secret to mastering financial analysis isn't about memorizing a textbook full of ratios. No way. It's about having a structured process, a repeatable investigation that you can apply to any stock, anytime. Our investigation has just 3 simple parts. First, we get the verdict, a quick, high-level check to see if the company's even healthy. Second, we uncover the why. We diagnose what's actually driving that performance. And third, we visualize the story. We see how things have changed over time. So let's kick things off with step 1, getting the verdict. The very first stop in our workflow is the Quick Analysis tab. You should think of this as your starting point for any company you look at. It's designed to give you a really fast, high-level overview in under a minute. So the best way to think about this first step is like your car's dashboard. You don't need to be a mechanic to glance down and check your speed or your fuel level, right? This dashboard gives you the company's vital signs instantly, answering that one big question up front. Is this company fundamentally healthy? It's the most important first filter in our whole process. And right in the middle of that dashboard is the health score. It's a single score out of 100 that crunches dozens of data points from the company's profitability, its growth, and its stability. So when you see a score like 85, you know immediately you're looking at a pretty strong company. But it's not just a score. This is what I really love. It instantly splits out the good from the bad. On one side, you'll see all the strengths, things like awesome revenue growth or being debt-free. And on the other side, it flags the key concerns, like maybe margins are shrinking or big institutions are selling off their shares. It gives you a balanced initial verdict in just seconds. Okay, so our dashboard just told us that the company is healthy. Great, but now we need to know why. What's actually going on under the hood? This brings us to step 2 of our investigation, using the Calculated Ratios tab to find out what's driving the performance. So, if step 1 was our dashboard, think of this next step as our diagnostics tool. This is where we pop the hood, plug in the computer, and really figure out how the engine is running. It breaks down the company's financial DNA so we can see what's really going on. All right, let me give you a classic investor problem. You find a company with a 25% return on equity, or ROE. Now that number looks amazing, right? It means the company is generating a ton of profit for its shareholders. But is that high return coming from a high-quality business? Or is it just being propped up by a ton of risky debt? How can we possibly tell the difference? Well, the answer is a really powerful tool called DuPont Analysis. And it's not as scary as it sounds, I promise. It just breaks down that big ROE number into its 3 core ingredients: profitability, which tells us how much profit they make; efficiency, which is how well they use their assets; and leverage, which tells us how much debt they're using. And this, right here, is how we solve our 25% ROE puzzle. A quality compounder gets its high ROE from really strong profit margins, not from debt. That's sustainable and low risk. But a leveraged growth company? It might have low profits, but uses a ton of debt to pump up its ROE. That is a huge red flag. Just understanding this one difference can save you from so many investing headaches. So we have our verdict, and we understand the why. Now for the final and maybe the most fun part of our investigation, visualizing the story. You know, a single chart can show you trends that you'd never spot in a table of numbers. Let's see how we can build these visuals. The real magic here is in combining different types of data on one chart. So, absolute numbers, like sales, get plotted as bars, and percentages, like operating profit margin, get plotted as lines.
This lets you instantly see the relationship between them. So you can ask, are sales growing, but our profitability is shrinking? That's a story the chart tells you in a single glance. And here's the really cool part. These skills aren't just for one market. You can apply the exact same principles to stocks all over the world. Let's check out how to do this on a platform like Google Finance, which, just so you know, needs its own little trick. So here's the quirk you need to know about. Google Finance loads its data dynamically. That means it only shows you one financial statement at a time, like the income statement or the cash flow statement. To switch between them and get our charts to work, we need a special workflow. But don't worry, it's a really simple 4-step dance. First, you minimize your analysis panel. Second, you switch the view you want on the main Google Finance page. Third, and this is the key, just wait 2 or 3 seconds for that new data to load in the background. And finally, you restore the panel. That's what triggers the auto refresh and pulls the new data into your chart. And boom, there's the result. By following that simple little trick, you can create these same powerful visualizations for any global company. Here, for example, we're looking at the quarterly cash flow trends for Uber, a chart that was only possible because of that minimize restore technique. Wow, we've covered a lot of ground, haven't we? From getting that quick verdict to diagnosing the why to visualizing the long-term story. So now let's put it all together into one simple, powerful workflow you can use every single time. And here it is, your new 3-step workflow. You start with the dashboard and ask, is it healthy? Then you move to the diagnostics and ask, okay, why is it healthy? And you finish with the visualization to ask, what's the story over time? This simple framework is your new guide for analyzing any stock in the world. You now have the framework to go from just being a consumer of data to being an active financial investigator. You can see past the numbers and actually understand the story behind them. So really, the only question left is, what hidden stories are you going to uncover first?